Tesla and Palantir, those are two of the stocks we have to speak about here today and what's going on there. A lot of stocks to talk about. I want to share with you guys some opportunities I see out there in the market, some different ways to play some of these opportunities out there in the market, what I think is going to transpire kind of moving forward, what I'm hoping for moving forward, and many other various things in today's video. So action-packed video. I appreciate everybody being here. Thanks so much for being subscribed, folks. I appreciate y'all as always and hope you get a ton of value out of today's video. Also, just so you know, on July 4th, we're going to open up the $10 Patreon tier on July 4th. So if you want access to that, and we can send it over via your email, just check out the pinned comment down there, enter in your name and email, and we'll send over the deal for access to that on July 4th. That's for the tier that essentially you can see the moves I'm making in the market each and every week. Okay, so that's pretty much a no-brainer. You should be part of that. If you're not already part of that, definitely sign up for that. We'll send over the deal for the $10 thing on July 4th. Okay, so first thing I want to speak about here is the VIX. The VIX just hit a new 52-week low here today. Okay, the volatility index. And we're now, I mean, the only time period you've really seen the VIX be lower than this recently is you got to go all the way back to 2018 when the VIX was at about 12 at that point in time, which goes to show you how completely just dead the VIX is right now. And this is driving a lot of people mad in the market. They're like, wow, how's the VIX so low right now? This is insane, right? And my pushback to that is there's nothing really unexpected happening in the market right now. There's absolutely nothing happening unexpected in the market. Inflation's coming down, and it's coming down substantially, right? The latest government numbers, which obviously the government numbers lag, those came in at 4%. The next government numbers are basically guaranteed to come in with a 3 or potentially a high 2 behind them. So, like, inflation is becoming less and less of an issue by the day. The Fed now at this point in time is basically wrapped up in terms of what they're doing, okay? And the only way the Fed will raise anymore would be like, I don't know, if inflation started to spike up massively again. Like if all of a sudden you saw inflation going from 2% to all of a sudden back to 3%, 4%, something like that, that's a whole different scenario. Then the Fed would maybe potentially go ahead and raise rates, okay? Commodities are down 15%. This commodity index in general is down 15% in the past year. So we get no movement up in commodities. In the past year, commodities are up 1%, which is great news. If you're thinking about inflation, this is about the best news you can get, okay? And let me share with you the most important thing of all of this, okay? This next slide is the most important of everything. That is, we have no black swan events that have happened at all recently. If you want to talk about the VIX spiking, the way you get the VIX to spike is you have something insane that's very, very problematic for the economy and the market to come out of nowhere. And we have had nothing recently. I mean, absolutely nothing. When Rona came out of nowhere and they were talking about we might have to shut down the economy for 3 years, that's huge, okay? And the VIX spiked to about the highest we've seen since 2008, 2009. When it was 08, 09, right? And you obviously had all the banks failing left and right. You had the housing crisis going on, a stock market crash. You had all that. That's a black swan event, okay? When you obviously had last year, the Fed raising far faster than anybody anticipated, right? No one, even the most bearish people in the market, did not expect the Fed funds rate to end the year at 5%, okay? No one expected that. The Fed ended up raising rates far faster than anybody expected. Everybody was predicting that the Fed funds rate by the end of 2022 was going to be about 0.5%, maybe 1%. And we ended up, ending the year at 5%. Like, that's absolutely insane. That's a black swan event. When something so insane happens that no one saw coming. We don't have that right now. Doesn't mean we can't come out of nowhere and all of a sudden you have something like that, but as of right now, we got nothing. So how are you supposed to spike the VIX when you got commodities down substantially on a year-over-year basis, inflation coming down rapidly month after month after month, and I can tell you within 2 to 3 months, inflation is not even going to be a problem anymore. Could it come back? Sure, it could come back. How's it going to come back? You need an overheating economy. If you're going to have an overheating economy, then you're talking about a situation where earnings for companies are going to fly to the moon, which is bullish for the stock market. So remember, the only reason we had that sky-high inflation is because the Fed decided to obviously pump in on the fiscal side and obviously on the government side, they decided to pump trillions of dollars out there. Meanwhile, you had supply chains that were completely a mess, and we had an overheating economy all simultaneously. That's how you got that crazy inflation. So you need a bunch of different elements to all happen simultaneously to get a scenario in which you're going to have inflation spike again. So that, and then you have earnings season, right? Earnings season could have been something that could have sunk the market in a big way and caused the VIX to spike. But honestly, earnings season was decent. We came through and, this was supposed to be the really bad earnings season. And we came through and it was okay. It was okay. We made it through. We survived. Some companies actually reported really nice beats on top and bottom line. Other companies had slight misses. Other companies came in line, but it certainly was no disastrous earnings season. We made it through. We made it through. And so for this whole VIX situation, man, it's just, it's in a tough place right now to get this baby to spike. Now, here's what we got going on. That if you're thinking about where this market's headed, we got a few very important things happening here, okay? The first one is in about 3 weeks from now, the CPI is going to come out, okay? Now, my personal belief is CPI could come in, and take this for a grain of salt because I'm always too optimistic on CPI. It always comes in higher than I expect. But I'm expecting, I would say 2.8% to about 3%, which means it will likely come in at about 3.3, okay? Just telling you, like, that's what's likely going to happen. It's likely going to come in at like 3.3 because I'm always too low on these numbers. Always like, 0.3% to 0.5%, I'm always too low. And so here's the Fed, they're going to have no need to raise rates anymore. There's no need, at least in the short term here, okay? So that's coming out in 3 weeks. That's going to move the market big, okay? And that is the one thing that if you're thinking about, like, could shake up the market if CPI came in hot, 4% plus, which is not going to happen. Like, that would be so shocking. I don't even know how to explain it. That's the only way you can really get the VIX to spike up in a massive way in the short term here, okay? And so I just wanted to cover that because I think it's an important subject, okay? ELF on a shelf just hit a new all-time high, folks. Congrats to any ELF shareholders out there. It is absolutely unbelievable. Stock just hit $111 plus here today. Now we are over a 1,400% gain on ELF on a shelf. It is absolutely incredible. Now, if you're thinking about, like, where's ELF's goalpost? Like, where's this company trying to go over this decade, right? In my opinion, ELF is trying to position themselves, and they're doing such a phenomenal job running the business and running the brand. I think they want to ultimately, long-term, try to become the biggest cosmetics company in the world, the biggest beauty company in the world. What are we talking about from market caps if you're going to become that, right? ELF today is about a $6 billion market cap, right? In order to become the big dog, you got to become bigger than Estee Lauder. Now, Estee Lauder caters to a very small segment of the overall population because their brands are usually very high-end brands that honestly most people can't afford. ELF, on the other hand, anybody can afford ELF products, from the lowest end cosmetics and beauty consumers to the highest end, right? And so ELF has a much bigger long-term opportunity. The way I would almost look at it is Estee Lauder is kind of like the Ferrari of cosmetics, right? But Ferrari, yeah, great business, but they can only grow so much, right? ELF I look at as more of like the Tesla, whereas like they hope that everybody is their consumer over time, and regardless if there's a recession or a good economy or an okay economy, ELF should be successful, right? And so that's where I think ELF's trying to go long term. Now, can they pull it off? I don't know. That's a big feat. If you want to become the big dog, that's a lot, man. I mean, they're gonna have to execute as well over the next 5 to 7 years as they have over the past 5 to 7 years, and that's going to be really hard to do. But I wouldn't put it past them. I mean, damn, the way they've been running this business. I mean, could they become the biggest cosmetics company someday? It's a possibility, but it's going to be a tough challenge in regards to that. Now, cosmetics is one of the best businesses in the stock market. You can invest in. They're some of the best businesses. Period. Estee Lauder, ELF Cosmetics, like these companies make bank, right? And their margins are incredible, and they're businesses that people just, when they're done the product, they use it the next one and the next one. They keep buying it over and over again. And so like a recurring revenue stream, right? But there's ways you can play this without saying, I don't, especially because I know like 85 to 90% of the people that watch my channel, you're guys, and you don't know the first thing about cosmetics. And you're like, I don't really want to look into the industry. There's ways you can play cosmetics without having to pick individual companies like Estee Lauder or ELF, for instance, and saying, I think this is going to be the big one or not, right? For instance, you could just buy Ulta Beauty. Ulta stock is a stock that is one of the best stocks you'll find out there for the past 15 years. Absolutely incredible company. They put up just amazing numbers quarter in and quarter out. They're one of the best companies in the world. Like, they're literally one of the best companies you could ever invest in if you look at the past 15 years. Absolutely incredible, right? And so this is a very simple investment that if you're like, I don't know which brands, I just want to make money because people buy cosmetics and they buy beauty stuff and hair care and all this stuff. Ulta is a way you can play it if you want to play it, okay? Another way you can play it is Amazon. Amazon's the biggest cosmetics company in the world. Amazon is so massive, you don't even think about some of these things. But at the end of the day, like, Amazon is the biggest cosmetics company in the entire world, folks. In the world. They took that mantle over, and I think they officially took it over in, I believe it was 2018, okay? And so if you want to play cosmetics and you don't know, which individual stocks you want to play, like, Amazon's just a way to play it, right? Plus you get all the other amazing businesses that Amazon has, AWS and all their other e-commerce business and their fulfillment network and all those sorts of things, okay? Now, obviously, Honest is the highest risk, highest reward play in cosmetics industry, in my personal opinion. And they have other businesses that are big businesses outside of cosmetics, right? They obviously have diapers and wipes and all those sorts of things. The only thing that's keeping me in this stock and why I haven't given up hope in it yet, right? Which it's a possibility I could give up hope in this stock, 6 months, 9 months from now if I don't see them come around with their margins and their profitability. But the thing that gives me hope is their cosmetics business and their beauty business, which those are very high margin businesses. And I think they have a lot of room for margin expansion and getting to profitability. So that's what keeps me in that one, right? Another way you can play it if you want, and this is a very hated stock right now, Target. Target is a big cosmetics company. So, there's a lot of opportunities out there to play cosmetics, beauty, and get in on this industry and prosper from it, then just having to even play stocks like ELF or Estee Lauder if you don't want to play stocks like that. There's a lot of other opportunities out there that you can get exposure to this, right? It's a great industry. It's a great industry. And it's filled with high margin products. Some of the highest margin products you'll find in the world. If you ever wonder how Kylie Jenner became a billionaire, it's from that Kylie Cosmetics. She was very smart to get into cosmetics. It's super high margin business, man. You make bank on it. And Amazon loves cosmetics. Target loves cosmetics. They love all this stuff. Why? Ulta loves cosmetics. Because the business is such high margin that you can make incredible, I bet you some of the best margin products that Target sells, I bet you it's cosmetics and beauty related things, okay? And by the way, I did a full breakdown of Target stock a few weeks ago. If you didn't get to check out that 2 weeks ago, I went into Target and Disney. Those are two very hated stocks right now. So if you ever want to go more down the rabbit hole, definitely check out that video there, okay? Now, oh man, Tesla and Palantir. Drop a tear from my eye. Tesla was down over 5% here today. Palantir down over 7%. The shorts, the people that have been wanting these stocks to go down are popping champagne bottles today. Big celebrations out there across the board. And I'm sorry for being a little late getting out this video. I mean, I spent all day just crying, in bed and just crying my eyes out because I'm like, it's not even a 10x anymore. I'm only up 999% now on Tesla. It's devastating, man. It's absolutely devastating. And Palantir, oh my gosh, man. Palantir only up 67%. No, in all seriousness, okay, we need a pullback. We need to pull back. These stocks have been running ridiculous. Tesla's up, oh gosh, 120-something%, I believe, this year. Palantir has been up in a straight line. I believe Palantir is up 100+% this year. The stocks have been soaring, okay? We need a pullback. This is healthy. This is what we need in these sorts of stocks. You don't just go up every single day. At some point in time, you need to take breathers. You need to have everybody reset their cases. You need to have the bulls be kept at bay a little bit and then try to figure out, okay, are we going down from here? You need to have a lot of the traders jump ship, go somewhere else. You need to have a lot of the bears step in and say, oh, Tesla's starting to see some weakness here. Maybe it's time to play some puts. Maybe it's time to short sell. You need to have some bear traps to be set. You need to have this sort of stuff, okay? Palantir, this is the one I really hope goes down in the short term here because honestly, I'm not done building out my Palantir position, but the stock's been running up in a straight line, and it's like, can we come down a little bit, baby? Can we take a little breather here? Can we just relax for a moment in time? That would be nice. And so my hope is Palantir has a few more of these days because ultimately, if I'm going to continue to buy Palantir shares, I want the shares for as cheap as possible. I'd much rather pay $10 a share for Palantir or $12 a share than pay $17 a share for Palantir, right? It's simple math. I'm going to be able to afford a lot more shares. So whenever you're buying a stock, you should hope in the short term it goes down as a long-term investor. That's what I always hope. And so with Palantir, am I satisfied with the amount of shares I have? No. I'd love to have 10,000 shares of Palantir. 10,000 shares and I'm good. 10,000 shares of Palantir between my different accounts and I feel good. I'm not even close to being there right now. So which means I want us to continue to buy Palantir, but, please take a breather, baby. As all longs out there, you should be rooting for this right now, okay? And, I put out this in regards to the market, where I see things going, where I hope things go, and whatnot. If we want to spend a moment talking about this, I posted this inside the private stock group last week, okay? And I said, this is my make-a-wish for the rest of the year in the market. Next 60 to 90 days, the indexes sell off 10 to 15%, with the Dow getting hit the hardest. I flip out of my SDow January 2024 calls and move those into hedges for next year, right? Which I'm already starting to consider, like, what are my hedges going to be for 2024, right? Which, if you're new to the market and you're like, what the heck's a hedge? It's basically just, I call it insurance, okay? Insurance in case of the market crashes or a bunch of stocks go down. There's a really rough market. It's basically kind of the way I think about it. Insurance that hopefully you don't have to use, and hopefully it expires worthless. But if, things don't quite go your way, it's there to save your butt. No different than car insurance or homeowners insurance or any of those sorts of things, right? Health insurance. You hope to not have to use it, but someday you might have to use it. And then when that day comes, you're glad you have it, right? Mid-drop also gives some bigger discounts in stocks that I would love for buying. It would also make for a more healthy feeling around the market. Absolutely, because the way the market's been performing has given a very unhealthy feeling. People feel uncomfortable. The market's been moving up so fast. That's a cool bird. And everybody's like, oh man, this market's moving up so fast, I can't get into these positions. The bears are even starting to give up. We need the bears to come back a little bit and feel like, they could take back control of the market. We need a more healthy market than right now. Right now, people feel uneasy because the indexes have been ramping so quickly. A nice pullback would make people feel a lot better about this market, to be honest. And by the way, a 10 to 15% drop, it's not a crash. If we're talking about a crash in the market, that was 2022. Okay, when the NASDAQ fell, I think it was 37% in a matter of a 9-month span or so, 9 or 10 months. Like, that's a real crash. 10 to 15%, I call that a nice size pullback. Okay, that's what I'm hoping for in this situation. Hard to get the market to fall 10% plus from here. We would need either a recession talk to get amped up, or people would have to take the Fed serious in keeping that they're, thinking about continuing to raise rates here, okay? And so that's my hope in regards to this. That's my hope, folks. And, I think it's tough to get the market down to 10 to 15%. I think 5 to 10% is a lot easier than 10 to 15%. But you never know. If you could have some panic kind of creep in, if you can have some interesting stuff start to happen in the options market, that's kind of bearish signals and whatnot, and maybe some technicals break down, okay. Stocks futures are flat after a 3-day losing streak. So now they're calling it a 3-day losing streak. And I say, keep it going, baby. Keep it going. I don't want this to end anytime soon. I would like this to keep going for a bit here. And, anybody that's a long-term investor, you should honestly want this. And here's the next reason why. I mean, when it comes to SDow, okay, and my call options in regards to that, right? Whenever I'm doing these hedges, my plan is, that basically they're going to expire worthless. If they expire worthless, that means the market likely did very, very well, which means likely I made a ton of money, which is exactly what's happened this year. It's been ridiculous. It's been probably my best money-making year in terms of portfolios being up since, maybe 2020. To be honest, it's been extraordinary. But my hope is my SDow to print money over the next 60 to 90 days. And here's how that would work. If, let's say, we actually saw the Dow go down like 10% over the next 60 days, that would mean SDow would likely be up 30%-ish, right? It's usually like a 3x on the daily move, and it doesn't keep up perfect, so that's why I see 30%-ish, somewhere around there. SDow would move likely up, okay? Now, my call option contracts in that sort of scenario, if that happened over the next 60 days, for instance, my call option on contracts would appreciate anywhere from between about 90% to about 250%. Okay, so that's why we're talking about substantial amounts. That's why I'm wishful, not just from I want to buy shares for cheaper, but the amount of money I could make on my hedges over this next 60 days, if that happened, would be obviously astronomical. And then I would have all that money ready. I'd cash out of that baby, and I'd get ready for my 2024 hedges. So that's why I'm very, very hopeful and wishful that this was to happen. I'm not convinced it's going to happen, but I'm hopeful it at least happens, right? And remember, those options contracts expire January 2024, right? Which I'd be able to sell to somebody for some very nice profits. I don't need to push it all the way to January 2024. I'd be happy, if those SDow call options printed money over this next, 60, 90 days, be happy to cash out of those in August, September, October, I don't need to hold it all the way to January 2024. I'd rather get out of those, sell them to somebody else, and they can ride those babies to January 2024. And if they do great, great. I don't need to take that sort of risk. Plus, I would like to re-hedge for 2024, likely around September, October. Maybe November, December, I could also consider hedging at that particular time. But that'll depend on many various factors. So that's my hope, man. That's my hope, and that's why I'm kind of, hoping the market slides. But ultimately, it would make for a much healthier market. And, also, one last thing I'll point out here is when it comes to that healthiness, it keeps the bulls at bay. When you have a nice size pullback, it keeps the bulls at bay. Meaning, essentially, sometimes the bulls can get too bullish, right? And start feeling too much FOMO. If the market's just moving up in a straight line, it leads to FOMO in the market. People start saying, whoa, man, I'm not making enough on my shares. I'm only making 50%. My friend over here is making 200% on call options. I need to start playing call options. I need to start doing this. And, obviously FOMO starts to build in. You start to build in a lot of unhealthy habits in terms of the way you're looking at the market and only thinking about the reward potential. Pullbacks, I can tell you, in my lifetime, the healthiest markets I ever went through had nice pullbacks of 5 to 10% in the indexes, where it would shake around. People would kind of get a little worried about whatever they were worried about at that particular time, and then we'd start on our next move upward. It was a very healthy market. And so I don't feel comfortable in markets that are straight up. I want a market that, goes on a nice run, pull back. Goes on a nice run, pull back. Let the longs add some nice size positions in, people like myself. Let the bears think that they've taken control of the market, set a lot of bear traps up there, and boom, we make our next run. Then we do a little pullback. That's a great market. That's a very healthy market. And that's much of the market that we went through from 2010 all the way through to 2020, right? I'm talking about right before Rona. That was a market we had. We had a lot of incredible runs. I'll pull it up for you guys here. We had a lot of very nice, incredible runs with some very nice pullbacks in that decade. And I considered it one of the most beautiful decades to be an investor that you could ever find here. We'll pull up 5-year and then we'll try to go back in time here a bit. From obviously 2009 was like straight up in a straight line, right? But from 2000, this is S&P 500, 2010, this kind of shows you, the S&P 500. And obviously the trend over the decade was up and up and up, right? But we had nice pullbacks here over time. These are all, usually 5 to 15% type pullbacks here in the indexes, and all this shakiness. But ultimately, where were you going? You were going up, right? But these were all times that could shake out weak hands or cause people to kind of freak out a little bit, and it was great. And this was the major crash we had, which was around December 2018. That was vicious to go through. It was very vicious to go through. Yeah, man, I got hit pretty hard in that one, and then we came back and we prospered. But that's the type of market I like, man. That's what I love. That sort of market right there, man. That's beautiful. That's beautiful. Look at that. Tell me that's not a beautiful. That's the most beautiful market you can imagine right there. If we could have a market like that for the next 10 years, I'll take it in a heartbeat. I will take it in a heartbeat. That's the sort of market I love, man. You get these nice pullbacks. Sometimes they last for a few weeks. Sometimes they last for a few months or a few quarters. And then you start your next run upward. That is so perfect, man. And that's the type of market I hope we get into over this next 10 years. That would be my hope overall. And it starts with having hopefully a nice healthy pullback here in the short term. So appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed. Don't forget, check out that pinned comment down there. Make sure you get ready to access the $10 tier on July 4th. That's a no-brainer. You got to be part of that. You got to be part of that, man. You get to see the moves I'm making each week through my Fidelity account in the Patreon portfolio. It is a no-brainer. And that account is still a fairly new account, right? It just started this year. So you're really getting to see from the ground up exactly how I build a portfolio. I got hedges in that portfolio. Oh, it's beautiful. It's flipping flapjack and beautiful. Much love as always, and have a great day.